Let's move on to the action coming in the primary market. Well, Urban Company IPO is all set to hit the D Street and opens from September 10th to September 12th with a price band of 98 to 103 rupees per share. My colleague Sajith caught up with the management to understand the usage of IPO proceeds and expansion plans. Let's go across and take a look at this conversation.
For us, our primary focus area is any and every service that can be delivered within the four walls of your home. We think of ourselves as a home services and solutions platform. Today, we offer a few services at your home, be it home cleaning services, appliance repair, electricals, plumbing, carpentry, or beauty services at home. But there are many services which we don't offer today. But in the future, we definitely will look to expand into other segments of home services as well. We will do it in a calibrated fashion. It's important for us to maintain quality of experience and control the entire supply chain of the services to deliver a superlative experience for our users. So that's something that we will keep in mind.
One of the biggest thing about platform companies is the kind of contribution margins that comes in with you. Can you give us an idea of how it's been moving? And on a plain reading of the balance sheet, your EBITDA, you've been reducing your EBITDA losses. If I'm talking about the core EBITDA losses here without other income coming into the picture. So how is the profitability pathway that you see for Urban Company?
So, Sujit, as you rightly said, we have a very healthy gross margin and contribution margin profile. In FY25, our contribution margin as a percentage of net revenue stood at 56%, and as a percentage of net transaction value was 19.5%. So that represents a very, very healthy contribution margin. And as a result, if you look at the last 3-4 financial years, the top line of the company has improved from 437.6 crores in FY22 to 1144.5 crores in FY25. So we've added roughly 707 crores of incremental revenue to the top line. And if I talk about adjusted EBITDA or operating EBITDA, that has improved by as much as 385 crores in that time frame, going from significantly negative to now positive 12 crores of adjusted EBITDA and positive 28 crores of profit before tax. So we've seen an improvement in the profitability of the company with growth, largely because we've been able to translate the incremental revenue into contribution and then hold our fixed costs relatively steady.
How do you see the discount environment there? Because as a platform service, you will have to continue giving discounts as you expand your offerings, as well as expanding the client base going forward. How do you see discount going through as you expand there? Because now you're going to be part of the listed space, and the investors and markets will very clearly look at the kind of discounting and marketing spends that you're going to do to expand your services.
Sujit, in fact, as a company, we've typically shied away from giving discounts or deep discounts unless the segments are very new and the market is competitive. We've typically wanted consumers to choose us for the value that we offer, which is high quality services rendered conveniently through the platform, versus choose us because we're offering a discount. And I think that ethos is something that we want to stick with and we would like to continue. In fact, if you see again the last 3 financial years, our marketing expenses have largely remained flat, even while top line has grown at a very healthy pace, including 38% in FY25 over FY24. So that's an ethos that we want to maintain and continue. Of course, from time to time, when we launch a new service, or if we are in a segment where competitive intensity is high, we will have to respond to that. But by and large, as a principle, we believe that uh, value for money that consumers see through the quality of the service as well as the convenience we offer is the primary reason why consumers should choose Urban Company.
That's the word coming in from the management of Urban Company. But